Stock trading is closed on June 13th, 2022. Let's start with our disclaimer. This is my trading plan for tomorrow, June 14th. Remember, I can be wrong. Any trade one makes should be at one's own risk. Look for the pattern with the early low. Well, first of all, we said that we should drop, and if we didn't, I had no call, but there was a call, which is that we would drop. Look for the pattern with the early low, which is here, and tomorrow should have the early high. We get to cross the target off the list for May 24th, 38.94.93. The last unfilled lower target was over a year ago, January of 2021, 37.01.75. And before that, you have to go to around 3,200 in the year 2020. During the day, MEJT said all these moves would retrace, and they all did. Now, one of the few decent things you can say about today's drop is that we dropped all day, and with under 2 minutes left to trade, we were trading over this low. And the fact that you went under it in the last 2 minutes doesn't mean anything. So at least you could make a case that's possibly a rejection of the break to below, particularly with this reversal here, bristle bar. Here's the weekly chart. Remember, we're trading under the lower band, which doesn't happen too often. And this bar was one bar completely under the TDS line on the weekly chart. If we stay under the low of that bar all week, it's a major break of support and should lead to a collapse, a crash. Crashes don't happen very often. They're rare birds. But if we don't recover this by the end of the week, that's major support breaking and a good chance of a crash. That will not necessarily happen. It isn't a lock. We finally got a few signs of capitulation today. One of them is a volume spike in the E-mini contract. When you see over 3 million volume like that, it's a sign people are throwing in the towel. It's usually at the low or close to it. Now, I don't know what the volume is going to be tomorrow. For all I know, the volume spike is going to be higher. But at least we finally got a volume spike we haven't seen before. And you can see these things are associated with at least lows over the short term. Here's the long-term chart. I don't think this drops over, but that doesn't mean we have to drop tomorrow. Well, let's start by looking at this chart. My stuff says we're going to retrace to this line, but again, doesn't mean we have to retrace to it tomorrow. I said if we drop to 36.78 today, I'd be willing to try to catch the falling knife. And even though we had a big drop, we didn't drop that much. What we did do is drop right to, but not through, trendline support. You connect all these lows, and you're right there. And that's not the only trendline support. You can connect these lows, and we're right there too. So we have two major trend lines meeting here. When that happens, either you gap under the trend line or the trend line wins. When I say the trend line wins, I mean if you don't gap under it, you probably won't break under it, and if you do break under it, it won't stick. And that only counts if it happens the first time. I mean, if we go up tomorrow and then break through it, that doesn't hold. But for tomorrow at least, if we're going to maintain a break below, we should gap under it. If we gap under it, and if we don't reverse it promptly, DeMarc's work calls for a drop of at least 640 handles below this line, and that line's dropping. So if we maintain a gap under this tomorrow and don't reverse it promptly within a day or so, it calls for a collapse, and we'll probably see the 3200s. Is it possible there's a wave count that says this is the end of the drop? Well, if this is the count we had on Saturday, if that's A and that's B, you want some kind of Fibonacci relationship between gray A and gray C. Well, that's gray C. And if gray A is there, it doesn't work. But all you have to do to make it work is move gray A over to here, and you get your Fibonacci 78.6. Let's look at that. If gray A is here, we'll start by looking at gray C. It would be an ABC. This would be C. And that works. That's 38.2. And if you measure all of gray C, yeah, shouldn't have reversed that. That'll teach me. If you measure all of gray C, gray A is 78.6, and that works. So we do have wave balance. We do have trendline support. We do have a volume spike. And for what I believe is the first time in history, the percentage of stocks in the New York averages, the percentage of stocks over their 200-a-day moving average, according to the figure I had, hit 0. And figures like that, they're only seen at major lows. I mean, I know one stock hit a new high today, so it can't be really 0, but that's the figure it showed me. Now this low is also a Fibonacci target of the prior consolidation and comes within the time frame for when a low could be seen. Remember, if you have a crash like this, it tends to occur within 3 to 6 days of one of these dates, and it's also a date from the square of 9. So at least there's a chance, but if not, it's a collapse. The only issue is, how do you count this drop as 5 waves down? I mean, it looks like a 3. If this is wave 5, it should be a 5-wave structure. Well, thanks to this little blip, you can count this as 1, 2, 3, 4, and 5. I'm not really thrilled with it, but if that's wave 5, it's exactly equal to wave 3. And there's a good Fibonacci relationship with wave 1. So even though it's not as pretty as I would like, the fibs work on the smaller time frames too. Tomorrow's pattern has a early high, but could still gap down. Typically it's a rally day with a final hour high, and failure is a straight line drop. Market drop to trend line support. We should either gap under the trend line or the trend line wins, meaning if we do break under it, it won't stick. If we gap under the trend line and don't reverse it promptly, DeMarc's work targets us going at least 640 handles under the line, and that line's dropping fast. Now, today's low was accompanied finally by signs of capitulation. We have a volume spike, a monthly NYA 200-hour reading of 0. I don't think it's ever been seen. And wave balance and a calendar compatible with a decent bottom. Crashes are rare things, so statistics give us hope that we'll bounce tomorrow. However, if we maintain the gap under the low of the day, would likely lead to a historic collapse, and we could see the 3200s before it's done, which also happens to be the next MEJT support level after this breaks. So early trades should be important tomorrow. There's at least a decent chance we're going to have a bounce. I've given the reasons. But if we continue this, if we gap down again, that kills the wave count, it breaks support, and we're talking about a major league crash if we don't reverse it fast. And that is today's call.